Vishripath, can you hear me? Can you ask to join this call, please? Parth, are you there? Vishti, are you there? Parth, Vishti, can you hear me? Can you please reply on the chat? There are only two of you. Others are coming or not? Gautam, can you hear me? Hello? Gautam, are you there?
Yes, sir.
Hi, your friends joining. We have only three participants today. What happened to the rest? Are the rest coming? Any idea? Yeah, I can see some more people have joined. Has somebody reminded them? Guys, all of you have joined. Radha, Parth, Rinku, Mansi, can you please request your friends to join so we can quickly start today's session? Can one of you confirm that you can hear me and also see my screen? Can you guys see my screen? What are these numbers? 12162, 12161. These are your roll numbers. Any volunteers to read the case study today? Okay, it's 4:10. Let's start. We have waited enough for people to join. So in the last session, we looked at corporate action in terms of dividends and interest on equity as well as fixed income securities. And today is part 3 of the module on transaction processing. And today we're going to talk about corporate actions. Okay. Now, these are the learning objectives for today. We'll understand what is a corporate action, what are the different types of corporate actions, what is the purpose of corporate action. We'll review some examples of corporate actions and we will describe the life cycle of a corporate action. Okay, and as is the usual style, we will now go through a case study again, which talks about the same Freshers Foods Limited, who has appointed Stringency Advisory as their investment banker. Anybody wants to volunteer to read the case study? Last call. No, and participants. Wow. Mansi, Kritika, Preeti, Vaibhavi. No? Okay, let me take this up then. So some of the corporate actions that Freshers Foods has experienced in their investments are as follows. A bonus issue by Confucius Corp at a ratio of 3:1. Freshers Foods had 10 lakh shares, which has now risen to 40 lakh shares. Okay. Which basically means that for every one share, they were issued 3 bonus shares. So therefore, on 10 lakh shares, they got 30 lakh shares. And accordingly, their total holding has increased from 30 lakhs, from 10 lakhs to 40 lakh shares. There was a stock split by ETC Corp. The face value changed from 10 to 1. Freshers Foods had 100,000 shares of face value 10, and that has now changed to 10 lakh shares of face value 1, right? So, face value is just a number that you can adapt in order to determine the number of shares that you will issue. So you can have a face value of 10, you can have a face value of 100. Most bonds have a face value of 10,000, 5,000, even a lakh of rupees, and some very institutional placements of bonds in fact have a face value of maybe a crore or even 10 crores for that matter, right? So a simple way of changing the face value is, to say that, instead of having 100,000 shares of 10 rupees each, now you're having 10 lakh shares of 1 rupee each, right? So all the people who had 10 shares, one share of 10 rupees, you will now give them 10 shares of 1 rupee each. So the way it works is, let's say I want to raise 10 crore rupees from the public in a retail issue, and I will decide that I can decide that my face value is 10 rupees, and therefore I will issue 1 crore shares at 10 rupees each, right? And then everything will be dependent on the face value of 10, right? If the company then decides to declare a dividend of 1 rupee per share, then the dividend rate will be 10%. Why? Because it is 1 rupee divided by 10. Okay. If you decide to declare a dividend of 15 rupees a share, then it will be 150% of the face value of 10. Okay. Now, one of the reasons why you reduce the face value is because you want to increase the number of shares in the market, right? Typically, this happens when your company is making extremely high profits. As a result, its earnings per share is very high, and therefore the share has become very, very expensive as a percentage of face value, and therefore people may think that the share is very expensive. So let's say that the share of this ETC Corp, which had a face value of 10, is worth 5,000 rupees. Okay. By reducing the face value to 10 and by increasing the number of shares in the market by a multiple of 10, that 5,000 rupees will become 500 rupees. The market price will become 500 rupees. And earlier, if you had to buy one share, you were to pay 5,000 rupees. Now, in 5,000 rupees, you will get 10 shares. So that's the way you would increase the liquidity of the shares issued in the market. Okay, so you will split your shares, you will reduce the face value, you will increase the number of shares that are there in the market, and that is why you will do a stock split. Confucius Corp announced a dividend per share of 25 rupees. So Freshers receives a dividend amount of 10 crore. Now, how does it receive 10 crores? 40 lakhs into 25, right? So 25 into 400. So that's how they receive 10 crore shares. So again, dividend is a corporate action. Bonus issue is a corporate action. Stock split is a corporate action. Again, another investment made in ETC Corp is announcing a dividend. of 30 rupees. And how much shares does Precious Food have? It has now changed to 10 lakh shares. Okay, so 10 lakh into 30 is 3 crores. So 3 crores is the dividend amount that Precious Foods will receive from the shares of ATC Corp. And the half-yearly interest was received on the ADFC infrastructure bond. The face value of the bond was 7 lakhs with an interest rate of 6%. So the amount received was 20,942. Okay. So what is the job done by the custodial team when it comes to corporate actions? They track these announcements made by these companies. Once these announcements are made by these companies, they will update their custodial software. Okay, and they will book a receivable system. They will inform the investment manager, who will again make similar updates in their portfolio management system, right? And the number of shares and the dividend and all of those will get accounted, right? They will keep a track of the ex date, the record date, the pay date. Okay. Then they will keep reconciling the positions. They'll calculate the entitlements, and on the relevant dates, they will ensure that either the amount is received in the bank account or the shares are exchanged. In case of a stock split, you will have to return your old face value shares and receive new face value shares. Whereas in a bonus issue, you will just get the additional new shares. So all of this tracking and accounting is taken care of by the custodian team. So that is the end of the case study. Let's go back to the presentation. So let's look at what is a corporate action. A corporate action is an event initiated by a listed company or a public company that brings or could bring an actual change to the securities, equity, or debt issued by the company. Stock splits, dividends, mergers and acquisitions, rights issues, and spin-offs are examples of corporate actions. All of these are significant decisions that must normally be approved by the board of directors and allowed by the company's shareholders, right? So there is an elaborate process. The board, the management of the company will first decide based on discussions with their investment banker as to what needs to be done. Are we doing a stock split or not? Then they will take a decision. They will take it to their board of directors. The board will approve it in a board meeting. And in certain cases, the same will also have to be approved by the shareholders of the company. And after that, the entire implementation process will be initiated, right? In terms of dividends, we had already discussed that there is normally a dividend policy that is a dividend policy that is established in the company, and they tend to generally follow it. And depending on the state of the company, whether it is a growing company or whether it is a mature company, stable company, the dividend policy will vary. Some companies which need a lot of capital are unlikely to declare huge dividends, but they would rather preserve the cash generated by their businesses to further their expansion plans. Whereas those which are stable path are likely to declare more and more amounts as dividends, right? Mergers and acquisitions, we have seen in the Freshers Foods case study that they acquired a savory company based out of Norway or some such country. And then they had also invested in the shares of a logistics company. Rights issues, mergers and acquisitions and spin-offs are where you deal with either acquiring a business or disposing of subsidiaries. Let's say you have, diversified too much. You are in the chemicals business, you are in the steel business, you are in the travel business, and they're all unrelated businesses. And let's say the travel business is in a slump due to COVID, and you decided to get out of it because you want to be in a core business. So you define a core business, you do a spin-off, or you do a demerger, or you sell a business. And that's how all of these corporate actions are then triggered. Okay, let's go ahead. The three fundamental categories of corporate actions are as follows. Mandatory actions, mandatory with several options, and voluntary category of corporate actions. Let's move ahead to look at different examples of mandatory. So mandatory are those corporate actions where the stockholders have no choice but to just take it. So for example, dividend, if the company announces a dividend, then you don't have any choice कि मेरे को नहीं चाहिए, नहीं आपको तो लेना ही पड़ेगा. They have announced it. Once the shareholders approve it, automatically it will come into your bank account, right? Bonus issue is another example, corporate action. If the company announces a bonus issue of 2 shares for every 1 share held, then if you are holding 1,000 shares, you will get another 2,000 shares. So your total holding will become 3,000 shares. Again, there is no choice given to the shareholder to determine whether they'll accept it or not. So these are what we call mandatory corporate actions, right? I think in terms of mandatory with several options, can either be paid in stock or cash, but that's like a bonus issue, or mostly dividends in India are paid in cash only. And if it has to be paid by way of stock, then it is called a bonus issue. And in both cases, you don't have any option. You cannot say that I will not take cash and I will take shares instead of taking cash, right? The voluntary ones are where the company will send you a letter, but you have a choice whether you want to participate in the same or not. And a good example of voluntary is rights issues, right? So if there is issue, then for every hold, they may offer you 1 share, which you can invest in further at a particular price. But you can choose if you think that the company is not doing good, or if you think that the price of the rights issue is a little high, then you may choose to forego that investment, and you may choose not to invest in that in the rights issue. Right? There are voluntary corporate actions. For example, buyback. The company will say, I want to buy back certain number of shares, and you have a choice to tender your offers in the buyback. So again, you may choose to tender or you may not choose to tender. So that is another good example of a corporate action. It would be like in the recent Tata Technologies share sale, the shareholders of Tata Motors, because Tata Technologies was a subsidiary of Tata Motors, they gave an option to the Tata Motors shareholders that if you can apply to the share issue of Tata Technologies, and some portion of the shares will be reserved for you. So again, it is up to you whether you want to participate in that offer or not. Of course, it's not an offer related to Tata Motors, and strictly speaking, you can't even define it as a corporate action. But it's a good example of a voluntary corporate action, right? Guys, any questions so far? This is going to be a really short session because we are already on slide 9. Okay, so what are the purposes of a corporate action? Corporate restructuring is one purpose. Okay, you are a cement company, you are Ultratech Cement, you already have 150 million tons of cement capacity, you want to expand your capacities, so you go and buy another company, right? You buy another company, you want capital, you want money to buy that company, so you raise equity capital by doing a rights issue, which we just said, looked at saying that it's a voluntary corporate action. But if you think the company is doing well, it's going to grow, its revenues are going to grow, its profits are going to grow, you may choose to participate in that rights issue, which will be a part of corporate restructuring. It could also be that Ultratech may decide that they have some cement plants in a foreign country, which were earlier owned by the Indian company, but now they have formed a subsidiary in the UAE, and they are transferring all the assets to that company. So that company, as a compensation to the current shareholders of Ultratech Cement, may issue shares in a particular ratio to all the shareholders. So now you become owners of not only the shares of Ultratech, but also its subsidiary in the UAE. Okay, so that is another example of corporate restructuring. Impacts on share price, uh, you know, and distributing to shareholders. So let's combine both of these purposes and say, so one good example of this is, declaration of dividend. Okay, and last time we had discussed that when a dividend is announced, on the ex-dividend date, we expect the price of the share to fall to that much amount per share is going to go out of the company, right? If the book value per share of a company is 500 rupees and the company is declaring a dividend of 40 rupees, so when that dividend is actually paid out, the book value of the company will down to the extent of 50 rupees. So instead of 500, it will become 450 rupees. So it will have an impact on the share price because the denominator, the book value is decreasing, and therefore the price, logically speaking, should go down as well. Okay. If you do a bonus issue or if you do a stock split, right? In a bonus issue, what happens? The number of shares go up, right? So again, to discuss that same example, if the book value of a share is 500 and the company does a bonus issue of 1:1, therefore it would mean that the number of shares, outstanding shares, have doubled. Logically speaking, the book value per share will then go down from 500 rupees to 250 rupees because the number of shares which is in the denominator have doubled. Okay, will the share price get impacted? It will get impacted because earning shares per share will also become half. All the parameters of the company which are on a per share basis will become half, and the share price will come down to that extent. Becomes X bonus or X dividend, the shares on the date when the trading commences will come down drastically to that extent, almost half. Okay. So you can, how is a bonus issue a form of a dividend? You can sell your bonus shares. When you get your bonus shares, you can sell it in the market and you can encash them, and that is like a distribution of profit. Okay. Instead of the company giving you a a cash profit and reducing their book value, total book value, by issuing shares, their total book value constant. However, the book value per share will go down, and then it is up to the shareholder to determine whether they're going to convert it into cash by selling the shares on the stock exchange, or they're going to keep hold on to it and in the with the objective of earning capital gains going forward. Any questions so far? No? Okay, let's go ahead. Okay, let's go through this examples of corporate actions again. Stock split and reverse stock split. So what is a reverse stock split? Okay, so we looked at an example where a face value of 10 is, you can do the other way around also. You can say that I have a 1 rupee face value and I'm going to increase it to 10 rupees. You will withdraw 100, 10 shares from the market from each shareholder, and instead of that, you will give him is exactly reverse. You want to take your company private. You don't want too many people to come and buy your shares, and therefore you would do this. So again, it really depends on what your objective is, how you are seeing the future of your company, what is your entire objective. You want to keep your company private within a few shareholders, or do you want to expand your business, bring in more shareholders, be in the limelight all the time? So all of this will drive some of these decisions. Bonus issues, M&A, spin-offs. The other examples of mandate, discussed a few of them recently. It's mentioned here as a mandatory action with several options. As we discussed, though, dividend is generally paid out in cash, but the management can decide to issue a bonus share, and then there you have the choice of converting the bonus shares into cash or under by way of, or keep the shares by way in your demat account. And voluntary actions for corporate actions are buyback and rights issues. Moving ahead. So what is the life cycle of a corporate action? Okay, the X date. Okay, X date is when after that the shares that you buy will not be eligible for the corporate action, right? So all the buyers before that date will be eligible for the corporate action. So this is specified by the exchange in discussion with the company. Buyers purchase stock before X date will be eligible for the dividend, and those who buy it later on will be not be eligible because they'll be buying shares and their names will not be uh, uh, recorded in the books of the company as owners of the shares, which is on the record date. Okay. Sorry. The X date and the record date are generally very close to each other. Okay. Generally within 2 or 3 days of the X date, the record date will be determined, because the settlement period in India is now T+1. So, by the end of the next day, you will come to know who's the new owner of the shares which were transacted the day before. Okay, so this is the significant date. Actions announced by the stock exchange on a daily basis. So custodians keep a track of these corporate actions and they make changes in their system. The record entry is passed on the X date. The accounting entry for dividends and bonus is passed on the X date, because as we discussed last time, after that date, the prices come down. Okay, so to take the example, let's say I have 1,000 shares, or a fund manager had 1,000 shares of Infosys, which are valued at 1,400 rupees today, right? So 1,000 shares at 1,400 would mean 14 lakh rupees. Okay, and let's say Infosys announces a bonus issue of 1:1. So now you will get 2,000 shares, 1,400. Uh, now the value will be around 700 rupees. So 700 into 2,000 will be close to 14 lakhs. So because of corporate action, there will be no major movement in the value of your holding in that company. It was 14 lakhs before the bonus issue, or before the bonus shares were issued. How was it 14 lakhs? 1,000 shares into 1,400. After the bonus issue, after the ex date, you recorded 2,000 shares in your books of accounts. And the next day, when the price opened on the market, it opened at a close to 700 rupees, right? And at the end of the trading day, it closed at whatever, let's say 701 rupees. So now you will account for the value of 701 into 2,000 shares. So close to 14 lakhs is again still the value in your books after the ex date, right? Now the record date is more from the company's perspective. Now, since you have already accounted for those bonus shares, it's only an accounting entry. The bonus shares have not yet come into your demand account. They will normally come on the pay date. So on the record date, the company will determine that yes, Mr. A, who was the fund manager, he had 700, so now he'll get another 1,000 shares. So on the pay date, those 1,000 shares will be credited to the bank account, to the demat account of Mr. A, who was the fund manager, and now the actual physical holding of shares will reconcile. Okay, to that extent, there will be a reconciliation gap, or it will not will show that you, but your demat account will only show that you have 1,000 shares of Infosys. Okay, so do analysis, and the critical part will be that it will only if the shares are not received after the pay date, that's when you have to start investing or not come, right? Any questions here just to the end of presentation? If you have any questions, we can take this. We will go back, or we will go to the quiz. Any questions? In the chat. No questions. Arey, Mr. Sujal is here. Okay, let's go to the quiz. Mobile phone. Please join the quiz. There are 20 of you. I want to see 20 people in the quiz.
तो वो दिखा दो ना बारकोड।
हाँ, how many of you have joined? I can't see it here. How many people have joined? वाह, म्यूजिक तो अच्छा बज रहा है. Can we start? I always face a technical glitch with this software. Now I can't see how many people have joined. Sometimes it starts on the second, third slide. Ah, at least we are in the session. This is now this looks better. Only 10 players have joined. Where are the rest? Okay, let's start anyway. There goes. Occidental Chemicals declared a final dividend of 7 per equity share. Real Biz Infra holds 100 shares. And the market value, what is the amount of dividend that they will receive? Time's up. Arey wow. Very nice. 7 of you got it right. It is, they hold 1 lakh shares. Kitna shares tha? I forget now. Anyway, let's see who's the leader. Urmila is leading, Kritika is second place, Gautam is in the third place. Great. Second question coming up. Simple answer है ये. 10 सेकंड और है. Everyone has answered. It is not collective, it is not trade, it is a question. That's what we've been discussing for the last half an hour. Okay, Gautam is in the first place. Kritika is giving him a tough fight. What a question coming up on your screens. If a shareholder holds 30 shares of face value 10 and the company announces a stock of 1:2, the shareholder will have how many shares? Two shares for every one share. 5 seconds to go. Okay. Urmila is now in the first place. The boys are falling behind. Let's go ahead. What occurs when a company invests a portion of a new company? तो आंसर मेरे को भी नहीं मालूम. So spin off. Okay. I don't think that's the right answer, but who's got that right? Okay, Sujal has got that right. Nice. Question number 5. Dash is a feature that allows shareholders to automatically reinvest their cash dividends in additional shares of the company on the dividend payment date. What answer is that? Dividend reinvestment plan. Generally, it happens in mutual funds. I don't think it happens in corporates. I'm going to argue about this with CFNX. Question 6 coming up. Dash issue occurs when a company wants to issue new shares, but first offer them to its existing shareholders. Right. Oops. I just gave a answer. Okay, Urmila is rocking it. Sujal is number 2nd. Gautam is 3rd. I am number 6. Okay. Question number 7 coming up. What do you do in order to reduce shareholder stake in the company? Buyback is the correct answer. That's the only way you will reduce shareholder stake, assuming you don't participate in the stake yourself. So your shareholding will go up as a percentage of total shareholding. Well done, Sarvesh. Last 2 questions. What is the answer? 15 shares. For every 2 shares, they are going to give you 1 share. So you'll have 15 shares left. It's a reverse split. Okay, last question. Yes, that's the last question. This is simple. I'm going to come first. I've already answered. Time's up. Voluntary. Okay, let's see who's the winner. Nice. Sarvesh is the winner with 549 points. Congratulations, Sarvesh. And Sujal is in 2nd place with 526 points. Well done, Sujal. Okay, let's back to the presentation. Just as a reminder, all of you have to register in the job portal whose QR code was displayed last time. I hope all of you have registered. If not, please register. And here is the QR code for a feedback on today's session. Can you see the QR code, please? Please give your feedback on the session. And then we can all say Tata till tomorrow. And please join at 4 p.m. tomorrow. We can quickly finish. Area feedback? Any questions? Okay, thank you everyone. I'll see you tomorrow. Okay.